percentage. Over 4% it has shed as of now. And meanwhile, Apple's shares are also falling 8.5%. They've fallen and they have erased over $255 billion in value. Nike shares as well are tumbling 13% to hit the lowest level since November 2017. S&P opened 3.4% lower. The nasdaq is down 4.1%. In fact, over 4% over that. It's now down by close to 4.5%, and it's shed the most in terms of percentage points. This, ladies and gentlemen, remember, as President Trump's tariffs have sent shockwaves through global markets. The announcement of sweeping tariffs has intensified fears of a global economic downturn, slowdown that has triggered widespread sell-off across major indices. Like I mentioned, in fact, Nike's shares, as you can see on your television screens, that's it. Breaking news we're getting. Nike's shares have been tumbling as well, 13% to hit the lowest level since November 2017. Perhaps that was the time when US election results probably came out. In fact, Crocs is also down 12%, Skechers is down 13%. Roger Federer backed on holding down 13%. Hoka shoemaker Decker's outdoor shares are down 14% as well. But Apple has shed $255 billion in value. Its shares have fallen 8.5%.
India, very, very tough, very, very tough. The Prime Minister just left. He's a great friend of mine, but I said, you're a friend of mine, but you're not treating us right. They charge us 52%. You have to understand, we charge them almost nothing for years and years and decades. And it was only 7 years ago when I came in, we started with China, charged them. We took in hundreds of billions of dollars from China in tariffs. And they understood, honestly. President Xi understood. He said, look, I understand. And the other countries, and they all understand. We're going to have to go through a little tough love, maybe, but they all understand.
All right, so that's Donald Trump. This is what he had to say after the tariff tirade came into full effect. But ladies and gentlemen, as of now, the markets are in a total bloodbath. If I were to give you a market check once again, well, the Dow Jones is down by over 1,100 points. It's down by 2.71%. The nasdaq has shed 4.32%, and it's down by over 750 points in trade. S&P 500 is down by over 180 points. It's down by 3.18%. Meanwhile, gold is also down. Let's see where the volatility index stands. Well, the VIX is at 22.87%. It's up by that much. So that's essentially where the markets are standing as of now. Nike's share, meanwhile, if we speak specifically about stocks and how companies are performing, well, Wayfair shares are falling 16.6%, Gap is down 13%, luxury companies, Ralph Lauren is down 10%, Tapestry has fallen 9.4%, and Capri Holdings has dropped 12.2%, Amazon shares down 7%, and so are Apple's shares as well by 8.5%. There is a mayhem across the markets. Investors are jittery from Donald Trump's tariffs because it has intensified fears of a global economic downturn, a slowdown, and that is what is triggering widespread sell-off across major indices. Let's get you some more stock-specific news. Well, Walmart is down 3%, Target has fallen 7.6%, Best Buy down 13.2%, and oil companies are also falling. Exxon has fallen 3%, Chevron is down 3.8%. Luxury companies, like I said, ladies and gentlemen, Ralph Lauren is down 10%, Tapestry has fallen 9.4%. Amazon is down as well, American Eagle down 8.6%. These are some retail brands which are seeing a massive fall as well. Abercrombie and Fitch is also down 11.3%, Gap down 13%. So mega cap stocks are sliding amidst a broad market sell-off after Donald Trump imposed reciprocal tariffs. This was much anticipated. In fact, we'll be joined by a guest to really assess the impact of whether markets were factoring in this sort of this sort of an impact. And joining us now is Mr. Ajay Bagga. Thank you very much, Mr. Bagga, for joining us here on ET Now. Mr. Bagga is a market expert. What do you make of the broad-based sell-off that we are witnessing on Wall Street? Were market experts like yourselves factoring in this sort of a sell-off, or is it worse than expected? Mr. Bagga. Mr. Bagga, if you can hear me, your first thoughts on US stocks that are tumbling on news of... Yes, Mr. Bagga, can you hear me? Mr. Bagga, if you can hear me, your first thoughts on...
I'm not...
All right, we'll try and connect with...
The anchors.
Yes, sir.
Hello? Hello?
All right, we'll try and reconnect with Mr. Bagga. There seems to be some glitch with his line, but mega cap stocks are falling and sliding amidst a broad-based market sell-off after Donald Trump's imposition of tariffs on at least 50 countries. That includes India as well. Apple, as one of the stocks, is down by 8% to a one-year low, and it's set for its worst day since September 2020. Nvidia is down 5%, and a majority of these tech stocks are down. Alphabet down 3.4%, Microsoft is down 3.2%, Amazon down 6.6%, and that is the company's lowest level since the month of October. Meta Platforms is also down 7% to its lowest since the month of September. In fact, if we take a look at the nasdaq index, it is down by close to 4.4%. All right, I'm told that Mr. Bagga is back with us. Mr. Bagga, what do you make of the market sell-off? I understand that there was a fair bit of volatility that existed before these tariffs really got kicked in. But was it along expected lines, or is the sell-off that you're seeing is worse than what was expected and anticipated by market experts?
Yeah, I think the markets were complacent. We did not see a great amount of shorts, as well as the VIX was at very complacent 22 levels. So we didn't go into the tariffs with a very pessimistic outlook. I think markets were complacent. The tariffs were worse than the worst case scenario. This huge tariff impact was not anticipated, and 60 countries getting reciprocal tariffs was not anticipated. It leads to a lot of complication. It leads to a lot of retribution, recalibration of supply chains. And right now, markets are just in a sell-off mode. You're seeing even gold come down. We were anticipating that gold would see safe haven buying. In Asia this morning, gold hit an all-time high level again. But now we are seeing even gold come down. US Treasury yields are down. So clearly the safe haven buying is going more into yen, into Japanese government bonds rather than the dollar. The dollar itself is down 2%, which is a very big deal. In FX markets, we don't see these kind of moves. Stocks, of course, are down anything from 4% up.
Absolutely, Mr. Bagga. And the maximum correction that we're seeing is in the nasdaq, which is close to now 5% is the correction that we're witnessing. And that is also reflecting in many tech stocks as well. Nvidia, for instance, I was mentioning, is down 5%, Amazon down 6.6%, Meta Platforms down 7%. But the big question is, how much further correction are you anticipating and expecting in the coming few days after these tariffs have been imposed? You see further correction, and if yes, to what extent?
Yeah, see, sentimentally, you're hurting the entire world in a very cavalier manner. And people are voting today out of US stocks. So that is what we are seeing. Secondly, fundamentally, the US growth could go down below 1% for this year if these entire tariffs are implemented as they are. So overall, prices go up, growth slows down, sentiment is broken, and the position of US, the soft power of US as a leader of the democratic world, that has got seriously impaired with the way the tariffs were rolled out yesterday. I think all that is combining today into this U.S. market sell-off. And it's not only in that. We are seeing the sell-off in U.S. bonds. We are seeing the sell-off even in the U.S. dollar. And despite U.S. dollar going down, gold is down. So that's just showing you people are taking money out and just staying on the sidelines. That's what's happening right now.
Right, Mr. Bagga. So when you say that people are pulling money out of, whether it's U.S. equities, whether it's the dollar and, of course, gold. So where do you see investors going to next? Is it going to be towards emerging markets?
Yes, I think so. Yen is a big beneficiary. We saw that move in the FX market today in the morning. And also the Japanese government bonds were being bought. I think Swiss francs will be bought. And I thought gold would be a natural haven buying. But we saw silver go down nearly 6%. That's more industrial. So the economic, outlook getting spoiled is showing up in silver going down 6%, copper down 3%. But now gold has also followed. So either somebody had big positions in gold, which they are liquidating to book losses elsewhere, or money is just going out of gold. That I'm not really understanding. Who could be selling so much gold to bring down gold? In a time like this, normally gold would be going up, but I've been saying gold is toppish. Gold was looking very toppish, but I didn't anticipate this kind of a sell-off in gold.
Right, but Mr. Bagga, do you anticipate further correction in gold? Because, there is going to be heightened volatility, at least in the coming few months, before countries separately strike deals with the United States. I mean, India is looking at a bilateral trade agreement as well, but that's not going to happen in the next couple of weeks. It's going to take months. So what do you anticipate for gold? What are going to be some of the moves that investors should watch out for, particularly with respect to this commodity?
Yeah, see, Chinese consumer, Indian consumer was already selling more gold than buying. That is a trend we were seeing over the last month. The the imports of gold into India and China, both going down. But there was huge central bank buying. And last week we saw Saudi and Qatari government and government agents buying in view of Trump's threat to Iran. So we saw a lot of Saudi and Qatari money moving into gold. That was helping gold. But otherwise, gold had reached a very toppish level. We were saying that now, given the momentum, what is sustaining it is central bank buying. But today seems to be a big sell-off that has happened. I really don't know who's selling. We'll get to know by tomorrow. But I would stay away from gold for now. This kind of sell-off that's happening, it's really people are generating liquidity at any cost. And so there seems to be somebody who's sitting on losses. But the markets were not showing that. Markets were very light going into tariffs, and especially there were hardly any shorts. So there was no hedging. VIX was okay at 22. So I don't know who's doing this selling. Central banks won't be selling gold. They should be buying more of gold. So we'll get to know in a day or two. But right now, I would not recommend it. This can go down further because it really climbed very fast. If you draw a line from November 2022, gold is up nearly 80%. Last 1 year, nearly 45%. Year to date, nearly 18%. So it has had fabulous.
Absolutely.
Yes.
Absolutely, Mr. Bagga. And gold has been, the rising levels of gold has been a big story over these past many weeks. But the big question is, what are these fair levels of gold being arrived at? And if you anticipate further correction in gold, then what are the levels that you're anticipating for gold to come down and finally settle on?
It's gone up so fast that it could easily reach $2,900 or even lower than that. So again, it's a function of buying. But I think right now, all central banks will also be conserving their cash. A lot of the Asian banks today had to intervene in the markets to shore up their currencies. So I'm sure there is intervention happening in the currency markets. Maybe central banks are creating some, cash and selling some gold reserves. But in terms of it correcting, it can go to any level once this momentum breaks on the downside. As I was saying, silver went down nearly 6.5% at the bottom today, and that's more the industrial part of silver because of the slowdown that we were seeing. We were seeing that selling. Gold is more the store of value, and actually the bond markets now are showing 4 Fed rate cuts. There's a big chance of a 4th rate cut as well. So with prognosis of Fed rates coming down, normally gold goes up. With a weak dollar, normally gold goes up. But there is this, today some huge selling has happened. Maybe it's Asian central banks creating liquidity to shore up their currencies. That could be one explanation.
Right. Absolutely, Mr. Bagga. Do stay on with us because we have one more guest who's joining us, Anurag Singh, Managing Partner at Ansett Capital. Thank you very much, Anurag, for taking the time out and speaking with us right here on ET. Now, broad market sell-off that we're currently seeing. In fact, Nike shares have tumbled. Several tech companies' shares have also tumbled, and of course retail companies' shares are also seeing a bloodbath almost as of now. The levels being seen on Wall Street, well, let's check them. The Dow Jones is down by over 1100 points in trade. Mr. Bagga is saying that investors were not factoring in this sort of a market fall. What is your overall assessment and what is your take on that?
So Sumita, I think as I see, I think market is now okay. The worst of the corrections you see in the first 30 minutes, right? So that's the kind of overreaction, and then the market eventually recovers. That is my sense that that's going to happen today, because look, already there are signs from countries like, for example, Vietnam, who are saying that okay, we are making all tariffs from United States as zero, which means that they also will kind of get a reciprocity of zero tariffs, or 0 or 10%. They might get zero. So the point is, eventually, before 9th of April, countries will kind of have their bilateral deal and agree on a kind of a stable number. However, outside of certain strategic industries which are actually in a rethink, which is autos, semiconductors, steel and aluminum, and some of the other shipping related industries, I think rest of the industry will have to get used to a kind of maybe a tariff of 10% or so eventually. But the stuff is going to come outside US. This is going to be made outside US, but they will have to pay maybe a 10% cost, which might be absorbed by the countries by currency depreciation or lower margins, or both, a combination of that. Maybe a 5% could be passed on to U.S. consumer as well. That's how I see it, Sumita. We don't have clarity, but I think markets, they have started too bad, but I think during the day, they should kind of absorb this news and recover in the hope and anticipation that 9th of April, things would be much better off than they are. So already I see signs that it is not cratering, as bad as earlier thought. So that's a quick take, Sumita, how I think about it.
All right. Right. So, Anurag, you're stating that this is perhaps a knee-jerk reaction to the tariff tirade imposed by Donald Trump across the globe. But what are the levels that you expect markets to finally settle in? Because you're stating that, this is just, initial anxiety that investors are displaying. But where do you finally expect the levels to settle during the course of the day?
Yeah. So, yes, this is a knee-jerk, and I think these levels could well be the near-term bottom. Okay, now I didn't want to say this. I don't work on technicals, but I think levels are already look at it from this perspective. U.S. economy as we speak today is still rocking and strong. Okay, the only anticipation is that the consumer might slow down because of higher rates. I don't think even the Trump administration wants the economy to get into negative and, the talks of recession come up and all this. I hear Bagga sir saying in terms of, the rate cuts by Federal Reserve. Look, they can't, until the inflation really tinkers down below 2.6, 2.7, or the unemployment market weakens significantly, which can only happen when the companies, start firing people, actually. I think that is a bit unlikely. So I think government is also watchful and willing to make a deal, provided there are reciprocal phone calls. So I think these levels are good, Sumita. I mean, index might not be telling the entire story, but the stocks have really taken a beating, about 30 to 40% the last. Even the Mag 7s have taken a beating of 20 to 30. Counting today, 25 to 30%, right? So that's a significant correction, right, for a market like US. So I think today is the worst fear, and it should get better from here. Yeah, that's how I think about it.
Right. It should get better from here. Well, on that optimistic note, let me also get in some news that's just coming in. Well, government sources are telling ET now that virtual negotiations with the United States will continue in April as well. And the US side is observing responses quite closely. So to your point, Anurag, of course, the US government is looking at engaging with governments across the world on how the impact of these reciprocal tariffs could be mitigated. Because like Donald Trump stated last night during his address, that US has imposed not equivalent duties on all of these countries. In fact, in some cases, these duties have been slashed by half. Mr. Bagga, one final question. How do you think industries like manufacturing, tech and agriculture will be adjusting to these tariffs? And are any sectors more vulnerable than others? And what kind of, an impact will some of these sectors see?
A sector like IT, if there is a slowdown, there'll be postponement of order flow. So we saw the sell-off in IT in India today, and we are seeing that in NASDAQ as well. Sectors which have margins where they can absorb will be able to do that. Textiles normally have the margins. They can absorb 25%. But something like an automobile, ancillaries, they don't have. So the ones who have factories within the US can produce in US, they can survive. The others will have to look for other markets. They won't be able to supply, and or the customers have to bear the brunt, in which case inflation comes in. Again, looking at gems and jewelry, there is margin. Shrimp, seafood, the margin is not there. That industry collapses at these tariff levels unless the end consumer pays you more. So that unless is a big thing. And then where between 27 and 10, the ultimate tariff on India settles. Agriculture, India will not open. That's a given. We have to protect the Indian farm, lobby, or the Indian agriculturists. So that will become a sticky thing. So the India agreement is not coming for 6 to 9 months. I don't think it's going to come in that fast. That will be a sticky proposition. US will not give visas to Indians to go and work freely.
Right.
Those will be the two big issues.
Absolutely, Mr. Bagga, and we'll have to see how India really ends up absorbing the impact of these tariffs, or will the impact of these tariffs, will these industries on which these tariffs will be slapped the most, will the impact be passed on to the consumer? But as of now, ladies and gentlemen, the Dow Jones, as we speak, has shed more than 1,300 points in trade. So absolute bloodbath in the United States markets. But as our experts, market experts were stating, that this could be a knee-jerk reaction and the market could stabilize a little later during the day. Well, with that, ladies and gentlemen, it's time's up from us right here on Rush Hour. And goodbye and thank you very much for staying with us. But don't go anywhere just yet, because lots more is coming up.